Hey everybody, Mike Weber here with another update on the U.S. housing market, which continues to show signs of weakness. Unfortunately, all of the latest news that's coming out is not pointing to a strengthening housing market. In fact, it really looks like the housing market is starting to fracture in different ways. Although prices seem to be hanging in there for the most part, of course, they're decelerating in growth. But they do seem to be somewhat stable, interestingly, but all the other measures are certainly pointing to major signs of weakness. So I wanted to start out and take a look at the Home Builders XHB, and as you can see from the beginning of the year, I mean, it has just absolutely fallen off a cliff. If we take a look at the 5-year chart, it doesn't look as bad. As you can see, prices now are about where they were at the beginning of 2017, roughly speaking. So essentially, we've erased almost 2 years worth of gains in just the last several months or so. So now we're down to 3363 ending today. Next, here's a great article that I'll have linked in the notes section below on YouTube that talks about how the gap in home prices versus household income is an indicator or a signal for recession to come. And so here's a great chart to take a look at that kind of shows the previous housing bubble or housing peak that popped, around 2008, and it compares that to where we're at today. And what you see is the blue line is growth in household income, and the brown line is growth in home prices. And so anytime household income has a major gap between where home prices are, that's a signal for a downturn ultimately in the economy, and then of course in the housing market. So here you see the correction that happened, home prices plummeted, and then there was a positive gap between household income and home prices for that while. And then since right about here, 2013, 2014, as we all know, home prices again started to exceed household income growth. And so now we're starting to see this gap start to continue to widen like we experienced back in 2008. Now in this article, they talk about this being an indicator for a recession to come. They're predicting that somewhere in around election time in 2020, this is going to lead to a recession. And the other thing that they cite here is U.S. existing home sales growth. When that starts to get low or goes below zero, again, that's another signal that home prices have outpaced household income to such a point that ultimately home prices are going to have to fall, which is going to lead to people having and being able to spend less money in the economy, which triggers a recession. And then, of course, it's a downward spiral to the bottom until things bottom out. Next, let's take a look at United States existing home sales, which slumped 3.4% to a seasonally adjusted annual rate of 5.15 million in September, following a revised 0.2% drop in August and much worse than market expectations of just a 0.7% decline to 5.3 million. So the analyst or the expected decline was going to be just 0.7%, but in fact it dropped 3.4% seasonally adjusted. So that's a huge drop. If we take a look here and we look at a multi-year chart, we haven't had this low of existing home sales since back here in looks like late 2015. And even though obviously home sales are seasonal to an extent, you see the ups and downs that transpire, but they haven't been this low for a very long time. So there's definitely a trend taking place here. Homes are just not selling the way that they have been over the last couple years. And then, of course, this will ultimately affect prices as time goes on, etc. Next, let's take a look at the supply of houses on the market in the United States. Now, we're not seeing as big of an uptick as I would expect to see with the other data. But that being said, we're certainly, at a relative high point that we haven't really reached since maybe July 2014, just for that limited peak, and then before that for several years. So we have kind of been, trending here, I don't know, around 5 months, maybe 5.5 months, and now we're hovering around 6, 6.1, 6.2. So definitely an uptick in the supply of housing across the U.S., but certainly nothing too major or abnormal yet if we compare to what we saw, at the previous housing crisis when we were up at 10, 11, 12 months, etc. Next, this is from NAR, National Association of Realtors, and again, there'll be links to all of this stuff in the notes on YouTube. But the total existing home sales percent change year over year has actually been negative 6 months in a row. So this is definitely interesting to see. We're definitely seeing a reduction in existing home sales, and we have been for the last 6 months. And it looks like for the most part, the gap is continuing to grow. So definitely not a good sign in general for the housing market. And diving a little bit further into the data, this chart gives us an idea of where home sales are dropping in terms of the price range. And so 0 to 100K, I'm guessing that the reason why this is dropping so much is just probably because there's less homes, that are left that are in that price range in general. And so clearly those are not selling as well. But as you see here, the 100 to 250K range, you're seeing almost a 10% drop. 500 to 750K range, you're seeing a 7.7% drop in sales, and so on and so forth. So across the board, in all ranges, we're seeing a reduction in sales, and it's certainly a substantial reduction across the board. So if this information was useful, do me a favor, click the like button, click the subscribe button so you'll continue getting videos like this. If I can help you with anything real estate related in the greater Los Angeles area, definitely give me a call, reach out to me. I'm here to help. Thanks so much for watching, and I'll see you next time.